Hello, Warriors. How's everyone doing here in FACE today? TGIF, NFP, and IDK. Everyone doing all right? See the Dixie chart up there? Hiya, Jeff. So, we're all glad it's Friday. We have the NFP, and IDK is I don't know. Used to be hard to say that. Everyone say it, it's cathartic. I don't know. You know, because we always think we have to. And then we start hunting and trying to justify things. Yeah, good. How's that feel? So, you know, we're taught to feel if we don't know something that we're not smart, okay? But there's wisdom really in being able to say, I don't know. Because great surfers don't try and catch every wave. They too wait for setups. Okay, I was never a great surfer. The wave would start and I'd be on it and it would just bury me. They call it purling. I didn't try and learn until I was 40. But anyway, Jan and Dean and the Beach Boys kicked me out of their band because I couldn't surf. So let's get to some markets here. So I really think that yesterday's range is pretty key here. You know, we've had these divergences here. We got this nice pop. You know, the guys here at ForexAnalytix are showing a rising wedge that we're on the verge of breaking down. This range right here between 735 and 675 is important, but on a day like this, they might shop the range. Maybe we're going to get a lower number. And I don't think even if we traded 96.70, it would blow out the divergence. I might take a shot down here in the dollar if they sell it off, and the yen, I would take a shot if we had got to the line and confluence here. All right, so 61.8 and the red line. I'd be looking at that. I'm not going to short it thinking it's going to go down there. We could just go. And, you know, I was hoping for one more flush in the yields, and that's also going to be, you know, affected by what happens today. And when I look at this, you know, we have a daily confirmation here. So the daily tells me there's another low coming, but short term, it's trying to grind something out here. Steve would call this choppy corrective. Definitely not impulsive like this. So maybe there is another flush, but, you know, you tell me. It's pretty neutral. So a lot of the markets are neutral, except for the metals. And what could happen on a day like this is the first move out on the news might be a fake out. So that's what I'm looking for. I want to see what happens here. I'm not a big roulette player. It's a binary bet, red or black, looking to react to the reaction. And something else I wanted to show. And the euro, you know, I mean, we're on the verge. I mean, this wedge line isn't perfect. Look, I don't even have it, you know, I have one hit. Probably should have brought it down. I don't know why it ended up like this, but look, it meant something yesterday. So if we could crack it, you know, call me crazy, but if we crack it, I think that we're looking at potentially a day, you know how every day we come in and say, oh, it's a very critical day. Every day is critical. Well, I really think today is, because if we get a breakout in euro, we could end up back at the top of the wedge down the road, right? That's 117. So I don't know if it's going to break out. If someone put a gun to my head, I would say, yeah, you know, the market's still pretty bullish a dollar, not as bearish a euro as they were a few weeks ago, but this is the key. So your brackets are, you know, candles closing over 1305, and then the other side of the coin is if we start taking out 112, then, you know, then the new low scenario comes into play down here, about 110, 109.90. So I go into this number with I don't know. Proud to admit it. but have some ideas how I'll react. Have your key technical areas ready. You should have done this last night, thinking about potential scenarios so that you're not analyzing on the fly. When you do that, that's called impulse trading. Okay, it's a pretty low hit rate on just being, impulsive in the market. So hope you have a plan. We're going to try and guide you through it as we guide you through the week 24/6. If you haven't tried it, I guarantee a refund if you don't get your $1 worth for 10 days. Okay? I'd wire it, but the wiring fee would be more. I'll send you a $1 bill. Okay? Let me know. I wonder what kind of pips we have going into this. And we get to hear Amanda. I mean, look at this site. You don't need to go anywhere else but your trading platform. Okay, so you'll get this as a subscriber free. So we're going to see what happens to the non-farm payrolls. Blake, you want to take over and talk about what you're looking for into the NFP?
Yeah, sure thing. Good morning.
Good morning. How are you?
Good. Let me see.
You're on your way to Disneyland this weekend.
I am going to Disneyland.
So
yes.
Today's financial Disneyland.
Yeah. Today's yeah. We leave for Disneyland. We got the house sitter all taken care of last night, and blah 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 blah. And I'll be gone for a few days. You guys are in for a real treat. Actually, this weekend, Gregor Horvat, he's going to do the week ahead video. So, which is he always does such a great job, and it gives you guys a little bit different spin on the technicals of the majors. It's always a big hit when he does the week ahead video. So you guys
the girls like it.
Oh, the girls love Gregor Horvat. Yes.
Yeah, he shoots the video without clothes.
Yeah.
Sex sells in every industry.
That's not true, but he does. He does like to show himself on video, which is cool. I think it's cool.
Yeah.
So not me. What, if I lost about 20 pounds, I'd be good. Anyway, just as far as today goes, and you said it correctly, Dale. You, as a trader, you should already been thinking about, like, what do you do in either situation? If the euro is bullish or if it's bearish, or the dollar, if the dollar is bullish or bearish, on a good number and a bad number, what do you do? So we're going to talk out a little bit of this scenario as far as what we can do ahead of the data. But as far as the euro goes, I'm gonna actually start with just a couple of things. First of all, you guys know that the euro is threatening a breakout, and a break above 113 and definitely a close above 113.10 is bullish, and there's no if and or buts about it. It's going to really push a lot of people out of the market should we break higher. That's obviously on a weak number, and the number that we're looking for today, and if you look via Bloomberg here, you'll see, and this is my Bloomberg just news. Yada yada. The survey is for 175,000 jobs. The actual whisper number is closer to 150,000 jobs. So that means even though the numbers are looking at 174,000 jobs, the street is actually not going to get too excited if it's anything above 150,000. We get below 150,000, then we start. The market might be a little reactive. So that I like to point that out, because when the headline number comes out, Steve and Stelios and Dale go over the number. Just remember, if it's 150,000, might see a little dollar weakness. I doubt the euro is going to really break out here. But if we, see anything less than 150,000, we might actually see the euro break out. Now, I do think that the euro is in a range right now, and the range is between 112 and 113.10, and we are not in the middle of the range. And if you go to my, if you think about like my thesis ahead of numbers, I typically will say that, you know, ahead of a number, the market's going to find itself mid-range. You could probably say that the support's probably closer to like this, you know, 112.30, and we are in the middle of the range. I'm just marking up the lower end of the range near 112 because that's going to be the previous trend line that we actually respected a couple of days ago on Wednesday, I believe. You know, so anyway, 113.10 is key. Now, the cable, little bit better bid, but what I'd really like to see, and you can see this 618 retracement of this move right here comes in at 127 basically 20. It's where we're at right now, but we're stalling at this 127.50. So really got to get a move above 127.50, 127, you know, 70, and that'll get the juices flowing for the cable on this big Gartley pattern that you see here, which we've been stuck for the entire week, really. But you know, I'm talking right now about, well, let me go. Well, actually, let me stop for a second. I'm talking about a weak U.S. number. Let's say the number's good. If the number's good, and you know, you can't write off the U.S. economy. Well, we've had a really strong full employment for quite some time, and I don't necessarily think that we're going to have a strong number, but I can't say that we won't. And if we have a strong number, the fact of the matter is the dollar yen has come right back to. You can see it right through here. Let me. I'm going to take this line here. I'll take that line because we don't need that way up there for now. This previous support right here is acting as current resistance, and that comes in at 108.60. Now, if you're in the camp of like, there's no way this number is going to be good, well, this is a perfect place to be shorting the dollar yen. If you really think that that's the case. My 2 cents is if this is a good number, the dollar yen is going to break above this 108.60, and we're going to be trading closer to 109.50. And maybe above 109 and closer to 109.50 by the end of the day. Like, let's say we put in a number that's 220,000 jobs and unemployment, you know, stays unchanged. I mean, we could really rip here. So, you know, I try to think about either situation, even though that I might be more biased one direction or the other. Like, I do think that today's number is going to be a little light. I do believe that we've been running full employment for so long that the numbers are going to start to sour from here. But that doesn't mean I'm right, and that doesn't mean I'm going to be right. I'm just saying that that's what my thinking is. That doesn't mean that you can't or you shouldn't prepare for either situation. Like I said, on a strong number, I think the dollar yen's primed to go higher. Now, if you do think it's weak, and if I'm correct and it is weak, then we're just going to, you know, continue, you know, towards probably 107, you know, in the you know, coming weeks, if it is a weaker number. Now, one currency pair I just tweeted about, and I want to talk about it, is the dollar Canadian. So the dollar Canadian, I tweeted that we had a failed breakout last week above 135. We did, and that was a pretty big failure in my book. That was you can see it right through here. You know, the highs of 2016, there's a high of 2018, and we rallied above that trendline resistance at the end of last week, failed, and here we are now at channel support. Now, this also, this was not in the tweet that I had mentioned, but you can look at this trend line that comes in right basically at current levels as well. It's the same trend line, same channel support that you see there. That's going off the January 2018 lows, October 2018 lows to current prices. I mean, we're right there. Right there. Okay. So what I'm trying to say here is, you know, if we have a weak number and we break through, like, let's say 133.40, the dollar Canadian is going to be a good short. Now, we also have Canadian data as well. So, you know, in order for the dollar Canadian to really break down, which I don't have any Canadian exposure, I'm just, you know, telling you guys that we'd have to have a strong Canadian number and a weaker US number. And then you could really see the wheels fall off the bus here in the dollar Canadian. The 200-day moving average comes in, right around 132.70, and that seems like a realistic expectation. The problem that I have with the Canadian, and just in general, is if you're not prepared, or let me take that back, if you're not already short ahead of this news, it's hard to get short following the news, because if the US puts in a weaker weaker number and Canada puts in a stronger number, the dollar Canadian is going to be 50 pips lower before you can even enter. So and I have a hard time trading those gaps during non-farm payroll. So let me put it this way: if I was short the dollar Canadian, I'd probably, if I was short and I was in the money, I'd probably just hang on to it. But I don't have any Canadian exposure. I'm just kind of giving you guys what I think that the potential downside is today, which would probably be down, somewhere down here, maybe even a little bit lower than that. This blue channel support that you see here, this is very loose. It's, not the best, representation of where the channel is. You could probably do something like this, probably be a little bit more accurate, something like yay. But however you want to look at it, all I have to say is, really key support is where we're at, and break below that and it could get a little uglier for the dollar Canadian. Again, and I'm pointing out what could happen on a weak US number, strong Canadian number. One last currency pair I'm going to talk about this morning with you guys, and then I'm going to bring in Steve and Stelios, and we'll talk a little bit about non-farm payroll and things that are going on. Is the chart of the day that I posted yesterday on our blog, and if you guys don't know how to get to the blog, it's something that you don't have to be a ForexAnalytix subscriber. Just go over to where it says blog on our chart or on our site. You can go to the bottom there when you're on our site. Okay. When you're on our site, and I don't know why it's not taking me there. If I click home, there it is. Okay. Usually, if you click on our name, and it'll take you right to the site. But you'll see across the top it says blog. Click on the blog, and our chart of the day is the U.S. dollar Swedish krona. All right, the U.S. dollar Swedish krona, and I'm going to show you a little different. There's a chart, but I'm going to explain to you what I'm seeing here. If you take the US dollar SEK, and I'm going to put it on a chart that has not been drawn on, or I can delete all the drawings here. Here's the US dollar Swedish krona. Okay, that's where we're at right now. Now, without getting, putting all the drawings in there, I'll just note that, we're sitting on pretty critical support here. Okay, it's also a 50% retracement. If you guys haven't seen that, take this low right here, take this high. You'll see we're a 50% retracement, trendline support, all really key support comes in right here. The unique thing about the US dollar Swedish krona is you'll notice that the euro US dollar has been has really, well, let me take it this way, or tell you this way. The US dollar Swedish krona has been moving more aggressive with dollar weakness or stronger Swedish krona than the euro has been weakening or strengthening against the dollar. Typically, you get a very inverse relationship. You can see it's almost like a mirror image, but we've seen a more exaggerated move in the US dollar Swedish krona in recent weeks than we have in the euro. So what happens, and you can see it's just, whoops, a mirror image, if you will. What happens if the euro, which is down here, if the euro actually breaks out to the upside, which we were just talking about, let's say the euro breaks through 113, what do you think is going to happen here? Well, the lower end of the U.S. dollar Swedish krona is probably going to get probed pretty heavily and aggressively. We might see that 200-day moving average before the euro dollar makes its way to 114. That's a big outsized move for the U.S. dollar Swedish krona, and it's already been leading us in dollar weakness, or as I pointed out in the blog, in European currency strength. So the point I was trying to make in that blog, and I'll kind of explain it right now, is if you were in the camp of buying the euro dollar, you might actually be might want to actually look at Sweden, shorting the U.S. dollar Swedish krona instead, because it is already super weak. And like I said, a break of the euro higher towards 114, it's probably going to put the U.S. dollar Swedish krona a lot lower. So it, for me, that's kind of a key, and it's also a key for me to really confirm that we have dollar weakness. So if, let's say today that the number is weaker, we have let's take a look at the calendar really quick. Let me get rid of the data flash. This is one of, like Dale said, this is, if you're using ForexAnalytix, this is one of the data news release products that you'll get with ForexAnalytix. It's great because I use Bloomberg, and I pay $2,800 a month for this system right here. This one right here. The numbers that come out here or the numbers that come out here almost are as fast as you see in Bloomberg, which is a lot to be said for that. Okay. It's gonna be quicker than pretty much anywhere else you're gonna get it on the internet without paying a substantial amount of money. So that you'll get. But I wanted to talk about today's calendar, and we're looking at average hourly earnings is going to be pretty important. Obviously, the jobs report, and keep an eye on participation rate. So, and then obviously the unemployment rate, at 3.6%. All those numbers are going to feed into the jobs report today. I tend not to focus so much on the numbers, but more focus on the price action following the numbers, because I got my guys in the office that I trade for. I trade for Gellis Capital, for those of you that don't know, and I have for the last couple years, and sister company for the last several years. But these guys, rattle off the news as it's coming. That's a strong number, that's a weak number, that's a blah 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 blah. So I chat with them all. So I'm not so much focused on the data as it's being released. I look at the price action. I kind of listen in on what they're talking about and seeing, because I've already outlined my strategy of what I want to do with each individual currency pair, which, as Dale pointed out, it's something that you should do as an individual trader all the time. So again, what I'll be looking for is either the euro dollar long, dollar Swedish krona short, pound dollar long. That would be on a weak number, weak overall data, and maybe even a dollar Canadian short. And then if it's a strong number, you got to be focused on the dollar yen, because the dollar yen could probably get a nice little lift. You look at all these other yen pairs, by the way, just make mention. You've got the euro yen and the pound yen. Euro yen's crossing that bull bear line. The pound yen is trying to come out of this descending wedge, which also looks bullish. So there's the yen pairs are already starting to move higher. And if we have a weak number, look, stocks may actually enjoy it, and that means you might get a stronger bunch of yen pairs in the event that we get a weaker NFP today, because the market likes lower rates for longer, and a weaker jobs report is going to suggest that interest rates continue to stay low, or we start cutting interest rates, which is going to just prop up equity. So anyway, that's my quick overview. I want to bring in my colleagues Steve and Stelios, who are going to take you through the live news. Good morning, gentlemen. How are you guys today?
Good morning, Blake.
Good morning, sir.
Good morning, guys. How are you?
Good. How have you been?
I'm happy that it's Friday, and I'm actually excited to go to Disneyland. I'm going to Galaxy's Edge. Yeah, we secured our reservations for Sunday, so I'll be, it's cool because it's a new part of Disneyland that's not open to the public. It'll be open, I guess, in a month or so, and to secure our seats, we had to
So
buy
you're
our
going
tickets a
to
while
the
back.
edge of
So
the Galaxy this
it's
weekend?
Galaxy's Edge.
Oh, you're going to the edge of the galaxy.
Edge of the Galaxy. It's the biggest expansion of Disney ever.
Wow.
In Disneyland. So,
and you'll be back to trade next week, even though you're going to.
Yes, I'll be back. We're only going to. I'll be back from the Galaxy's Edge by the end of by next week.
That edge,
I will not. Steve, you want to go ahead and take the charts? I'm going to pass it over to you guys. You guys, hey, have a great Friday. Good luck for non-farm payroll, and remember, make sure you visit our sponsors, Forest Park FX, when you get an opportunity. They're the ones that help make this free webinar possible for you guys and gals. So thanks everybody for tuning in.
Good luck today, Blake, and have a great time, bro.
Hey, thank you. Good luck, everybody. And I won't see you on this week's week ahead video. I'll see you next week, and I'll report back on how the edge of the galaxy was.
I'm sure there'll be pictures.
All right. Yes, I will. I'll take a ton of pictures. You guys have a great one.
Buddy. See you.
Bye-bye.
Hey, Steves.
Hey, Dale.
How are you guys?
So we have 3 minutes until payroll, so might as well.
Ready for the news, so Stelios can use the time in between to take us over what has happened overnight.
Go ahead. We had the talks between the US and Mexico are progressing. There is not going to be tariffs on Monday because Trump tweeted yesterday that it's still ongoing. They're going to extend it. I have no idea how this is going to end, but that's the status. Data-wise, we had some pretty shocking German industrial production data, expected slightly negative. Month-on-month came in at minus 1.9. The trade balance also quite a bit worse than expected, and 3 billion worse than last month's print.
That started to become a habit, huh?
Yeah, I mean, we had a couple of good readings out of Germany yesterday, but really the important ones are coming out very soft. And we have to also remember that today is the last day of Prime Minister May being Prime Minister. And, they talk about the succession is heating up, but the bookies have Boris Johnson as the red hot favorite. And we have to remind everybody that he's a pretty adamant Brexiter. So he's going to have, if he's the leader, he's going to have definitely a very different course of action against the Europeans. Is this going to be good or bad? I have no clue, but the guy is a bit unpredictable. And, it's kind of a trend. Most politicians nowadays are quite unpredictable, apart from Merkel. And so that's...
Merkel is on the way out anyhow. So
yes, that is true.
Soon enough, she won't be...
Yes, so we have non-farm payrolls. We have the Canadian employment numbers. Now, remember, last month we had a huge print, 106,000, which was way above the average, let's say. So the market's expecting a pretty flat number this month, which could compensate for that. But that's going to be quite important. I think we should have USD.
Forecast for this month is 8,000, as you said. Last month's number was, out of this world. Literally, it blew out.
And not only was it the big number, it was also a big chunk of that was full-time jobs. I think 70-something thousand out of the 106.
Yeah, because of how big the number was. I'm really curious to see the revision.
Yes,
that we're going to get. So here we're also going to see the revision. I'm curious to see how this number is going to get revised.
Yes. Now we also have average hourly earnings from the US. Let's not forget about that. That's quite important.
Yeah, that's quite an important one.
And usually when there's no big movement in payrolls, like ADP yesterday was very low, so we're all quite excited about non-farm today. But usually when ADP and non-farm are in line with expectations, that's the number that moves the market. So so that's the other thing to watch. Okay, we have 10 seconds.
Yeah. Here it is.
Stand by.
Let's see.
I love this data flash. I love it, man.
So let's see. Any second now. There we go. Oh,
75. Wow.
265.
The
Yeah.
revision is also lower.
The revision is lower, quite a lot lower, from 263 to 224. US average hourly earnings 0.2 versus 0.3.
Canadian numbers better than expected, and there's no revision at the moment, which is weird. There's always a
Canadian
revision.
numbers again very good, and Canadian unemployment fell from 5.7 to 5.4. As you see, the biggest mover, obviously in this case, is the USD Canadian, which is currently making a big technical break. As you see, it's breaking through.
I have the euro right at the wedge line, right here again.
Yeah. USD, you're absolutely right, because Euro USD was at the precipice at a key juncture. USD CAD, with the combination of bad US data, good Canadian data, is breaking through this channel that has been there since the very first days of 2019. So this is a 6-month channel breaking down. I think this is a very, very important technical break for the USD CAD. Let's see what the US dollar is doing against other currencies.
It's not only that it's broken; it's also the strength, the fierceness.
Indeed, and especially if you take into account the previous false break higher, from that ranges high that we had, which is when you usually get a false break and then you get a reversal and momentum building to the downside. That's an extra sign that you might have a lot more downside. So Euro USD is making another attempt. This is the third day that it's going to be attempting to finally break through this confluence of this descending wedges resistance and this horizontal support resistance area at 113. Let's see.
10-year yields, Steve, are about 2 bips away from the low that we made early this week. So
speaking of which, let's have a look at them on the daily chart so we get a better idea. Here it is on the daily chart. Obviously, this is looking very, very bearish. And even if you see the last 4 days, they look to me like a little bearish consolidation, probably.
I'm looking to short or buy bearish ETFs in the bonds next week when TLT is 133 plus. So I'm looking for this one more flush, Stephen. Also, I think that if that turns out to be right, I'm a little bit impressed with the way the yen is holding up. I still think it could go to 107.60.
Speaking of which, let's look at it. Yeah, use the yen one more day so far that it has been consolidating, in this area above the 61.8, which is, super critical to determine if we're actually breaking down or not. But on the other hand, it has been unable to rebound. So far, this just looks like a pause in the move lower. So I wouldn't want to be bullish here.
But Jupiter is in opposition on the 10th. I use that in your trading plan?
Probably not. I'm probably going to abstain from using that.
No, don't forget Jupiter, man.
Yeah, and as you see, 10-year treasuries also pushing higher, still some distance from hitting once again this ascending channel resistance. What is more impressive, but people that have been following us, they should have been expecting that, is the vertical.
Looks like
move.
Bitcoin last year.
Yeah, it's a vertical move that we've been seeing for the bonds. You shouldn't be surprised by that. If you remember, we were monitoring this multi-year corrective pattern. We kept saying that this is a corrective move. Why did we know that it is a corrective move? Simply because it had everything that you expect to see from a corrective move. It was slow. It had, huge overlaps. And, after a long period of time, we only ended up retracing a small part of the prior move higher. So, this is, the definition of a textbook correction. And once we broke above it, we moved a little bit higher. We consolidated within a range. And once we broke above it, as you see, we've literally gone vertical. I mean, I don't even have targets, to give for this. Actually, that is not true. We do have targets, but now in order for us to find targets here, we need to extend this whole corrective move. And let's see what we get. Okay, we're exactly at the 127% extension of this multi-year corrective move at 170, 173. The next upside target is the 141.4 at 173.46, and the 161.8 is at 176 in essence. So, the bond looks quite good. Okay, at some point it's going to pull back. Of course, nothing moves in a straight line, but I wouldn't definitely be trying to fade this move because you're going to definitely be on the wrong side of the market. Let's go back to what the rest of the pairs are doing. As you see, euro almost at the highs of the day, of the days. Pound, if you have a look at the 4-hour chart on the pound, it looks like we had a first leg higher, then a consolidation within a triangle, and we seem to be trying to break above it. Let's delete all this because it has already happened. So I think that pound also looks good for a continuation higher. It wouldn't be my preferred long position against the dollar. As I've said, I would rather be long other currencies against the dollar at the moment, but that doesn't mean that the pound won't follow higher. Also, one of my favorite here is the Kiwi. As you see, the Kiwi also spent a little bit of a time consolidating within a triangle, and it's currently breaking above it. So I wouldn't be surprised to see another leg higher for the Kiwi before perhaps seeing a deeper correction lower, perhaps to retest this 66-cent area. The next area of resistance is the confluence of the 50% fib and the horizontal resistance area at 67 cents, 67.10. So I think that's where we should be looking for. But as I said before, I think that the combination of the data we got really favors USD CAD continuation to the downside, especially considering the big breakdown we are seeing here. The next major area of support comes at this confluence at 131.70, 131.80. I think it is very, very likely that we're going to make it there within the next few days. Let me see. Let me open the panel to see if we have any questions. Chat. I like the pound against the Aussie. Aussie is rate cut cycling, not rallying against USD. Okay, let's have a look at it, and I'll give you my point of view. First of all, we've seen the pound Aussie finding resistance at almost at the previous low, as you see here, and you can also view this as a descending wedge lower. But I would tend to agree with you because so far the rebound higher is really corrective in nature. So I'm with you. I would probably be looking to sell this rebound. I wouldn't rule out though an extension higher towards 183.50, 184 before seeing lower prices. But yes, I do agree with you, and I think that the pound Kiwi actually looks even better. Pound Kiwi still remaining within a descending channel. We actually rebounded exactly to test this descending channel's resistance. We seem to be getting rejected so far from there. I would be monitoring this trend line on the RSI. If we break below it, I think we're going to be continuing lower. I also like the fact, and I said it several days ago, that prior, more or less in this sense, it resembles what happened with the USD CAD, because prior to this steep move lower, we had a false break higher from this wedge, like one last thrust higher, before reversing. We had that intraday reversal, which was quite interesting. And once that happened, we never looked back. We kept depreciating. So I do like pound Aussie and pound Kiwi for a resumption to the downside. But between the two of them, I would definitely go for the pound Kiwi. Speaking of the USD yen before, as you see, so far this move in the USD yen looks to me pretty clearly corrective. That's what I would be paying attention to. And it looks to me like a nice bear flag. So as you see, we've had, since we reversed lower from 1240, we've actually posted several consolidation patterns that always got resolved to the downside. You can also see the equivalent moves on the RSI. And it looks like this is one more consolidation that is ultimately going to get resolved to the downside. Just look at this RSI trend line as well, being tested as we speak. The 4-hour candle is also very, very bearish and a long outside black candle, which would point to a continuation lower. Let's keep an eye on what is happening on the Euro-USD. Euro-USD now breaking through 113. Let's see. For me, it's going to be very important to sustain that to close the week, the day and the week above it. And equivalently, you can see, it's better if I show it actually on the daily chart. You can see that USD Swiss is breaking down from this multi-month ascending wedge. That is also a very, very bearish signal. Okay, one way or another, whichever side we resolve this, consolidation, because in essence a wedge is, it has a direction, but it's a formation that prices contract, right? So one way or another, usually when you break out, you see some type of an acceleration. And keep in mind that technical theory would suggest that a breakdown from here could even lead all the way back to 92 cents, to a full retracement of this wedge. So I would be very, very careful being long. Once we confirm that we're breaking down from here, you can also monitor this previous spike low and horizontal support resistance area at 98.50 cents. I think that a break below there is more or less going to seal the deal for the USD Swiss, which is very tightly inversely correlated to the Euro USD. So, it's not accidental that at the same time that we're breaking below an ascending wedge in USD Swiss, we're breaking above a descending wedge in the Euro USD. But as I said, I don't like to jump the gun. I think that once we confirm these moves, we're going to see the market squeeze. So there is no need to jump the gun. I would definitely wait for a daily close to confirm that we have those technical events in hand. So a few more hours isn't really going to ruin the risk reward here, because if we do confirm and the market starts squeezing, and why would that happen? Because simply the charts I'm looking at the moment, people that have been short the Euro USD for a long time are looking at the same charts. People that have been long the USD Swiss are looking at the same charts. And at the very least, we're going to start by having people saying, okay, this has been a good run. I made some good money being short the Euro USD. I also had positive carry, but now probably it's time for me to bail out. So that on its own is going to move the market higher. Then you're going to get speculators like us saying, okay, this looks like a nice technical break. It's time for me to be buying the euro for a period of time, or selling the USD Swiss for a period of time. And that is how you usually get, what begins as a momentum loss in the direction of the trend, which is clearly what we've been witnessing here in the euro. What it then transforms this to an actual reversal. Okay. So, it is what it is. And I do think that this is going to prove to be quite an important week if these moves get confirmed. Now, let's see how the metals are reacting to these moves. As you see, gold is pushing highs once again. We said that the first area of resistance is the previous high we had here at 1346. We are currently about to test it once again. And then we have the 1355, 1360 area, which is super important. You can see this is a multi-year pattern. If we break above 1360, there is no doubt in my mind that gold is going to resume higher. I don't know for how long. I don't know how big of a move we're going to see, but definitely good enough to be worth buying the breakout, in my opinion. Okay, so things are quite simple. The closer we get to 1360, you like gold to the downside, you sell and you have an amazing risk reward in your hands. But keep in mind that if we do break above 1360, I think that, remaining short is going to be extremely, extremely dangerous for the health of your account. Personally, I would be looking for any opportunities to be buying. I tried buying down here. This little false break knocked me out at, fooled me in essence. But, I was in the right side of the market. So I'm going to try to be on the right side of the market once again. For example, if you don't want to buy the breakout, another alternative you have is if you get lucky buying a pullback, if we break out to 1360 to retest previous resistance as support, that's going to be an amazing risk reward opportunity once again. So these are the two scenarios here. And I think it's, yes, Telio?
Sorry to interrupt. Andre is here with us, and I think he has a few things to show if you
absolutely. Absolutely.
Take your time, Steve. Hello, everyone.
Hey, Andre. Okay.
I just don't know how to push my screen, but finish first, and then I can try.
It's very simple. You will have to click the share button, and it's going to ask you if you want to interrupt my sharing.
Wait, sorry. I click at yes.
You're going to click the button that says share button. Share.
Okay.
Okay, but let me finish with this.
Yes. I'm sorry because I clicked at the first option, but I refused the next one. Okay.
We're gonna see. Aussie, nice rebound from there, from the 78.6. Keep in mind 70.35 is a confluence of resistances. I'm not saying that the Aussie can't move higher from there. It actually can. But I'm saying that I would be a little bit careful there. Confluence of 3-4 resistance areas. So 70-30, 70-40. I would be a little bit careful there. If we slice through that level, I think there's more upside coming for the Aussie. And we have another question about the pound yen, which I think I'm going to answer the same way I did 2 days ago that we had a question. And I'm going to say the following. Can the pound yen reverse higher from here? Yes, it can. Would I be buying it? No chance in a million. I see here a very impulsive move lower, and we've been rebounding for 2, 4, 5 days. Within those 5 days, we haven't even managed to retrace a single bearish day that we had last week. So personally, I'm not buying this. No chance in a million. You want to be buying things against the yen? I wouldn't be buying the pound yen. Okay. And as I said before, I'm not saying that it can't rebound higher. I'm saying that relatively to other pairs, it seems much weaker. So why would I be trying to buy weakness and not strength? Okay. And, a last question on Euro Pound. What do I say about the Euro Pound? As I was saying several days ago, what I say about Euro Pound is something that is bullish, but probably at the last stages of this move higher before we see a big retracement lower. So I think that, any extension towards the confluence of the 78.6 and this horizontal support resistance area at 90 cents, 89.60 to be exact, is probably going to be a good opportunity to be short, at least in the short term. So I think the big move higher has already happened. We need to see some retracement lower before trying to buy again. That doesn't mean that we can't move higher. As I said, 89.60 is a viable target that we can see within the next few days, but I wouldn't be pushing my luck if I was long this pair. I would rather wait for a retracement back, perhaps towards 87, 87.50, if you want to try buying again. So something like that. Okay. So, Andre, let's try to solve the problem for you. Let me see. So try to click share.
Okay. Can I interrupt you at this point, Steve?
Of course, absolutely.
I click yes. I click my
screen.
The screen. Okay, and share.
There you go.
Can you? Okay. Nice.
Yeah, there you go. We can see you perfectly fine.
Dollar versus Canadian, the one that we are all worried about today, related to the most recent data. We are approaching, and I have a few, let's say 15 instruments that I want to share with you today. Let's start with those dollar-related ones.
Give me 1 second, Andre. Coach,
Sure.
do we have a guest today?
Yes, my friend.
Okay.
We do. So that means, that's why I asked. That means you're going to have to rush it a little bit.
No. If somehow some of them I will miss some of them, and those who are subscribing for
If we didn't have a guest, you could take as long as you wanted. Of course, there's no question.
You could go an extra 5, Andre.
No,
Okay.
no problem.
He's not. Brian's not here yet anyway, so
It's a fast process. I don't need
Let's
a lot
go.
of time. So this is one of this is a shark pattern printed at 168 extension. It has printed a daily fractal above the previous above the previous weekly fractal resistance there. So published before the completion point, the market is now approaching the default target, the 50% retracement, which is the 1.33. And this is also, and it's also approaching the 200 moving average, the daily moving average, and the weekly fractal support below. So at this point, and at convergence with the golden fib, I will point. Let me just put the price there, 132.58. So this is the golden Fibonacci ratio, confluence with the 200 moving average. So I will expect some pressure at this level, a retest of this weekly support and a violation of that support should,
Andre, just to
guide
understand,
us.
in your mind, the support areas you're looking for, should they be viewed as levels that we might see a corrective bounce or a resumption of a larger higher?
No, that will be.
So basically, what is the direction of the market at the moment in the medium term, in your viewpoint?
No, on a daily time frame, I believe there's no doubts for anyone. No, we are trading in a bullish momentum that we expect to be violated at some point. So if you push into a weekly time frame, I believe, and I agree with you, this is a pure corrective momentum.
Yeah, just look at this move. It's so choppy, so lapping, right?
Yeah, it's not an impulsive momentum. Obviously, if you go into a lower time frame, we will find some impulsive momentums. That's how we identify those harmonics or those advanced pattern formations based on those impulsive momentums. But at this point, I will not say this is the level that we can expect the market to fall below this trend line, but it can happen, who knows? But at this point, those fractals tends to put some pressure once the price approaches those levels. So, and obviously we try to search for some confluence data or for elements that can guide us through the price action. And at this point, we are approaching a previous weekly fractal. I'm not saying the market will bounce from this area. We are already approaching oversold conditions. So I will not be surprised with some, let's say a sideways process around these levels, and then a bearish momentum continuation. Let's call it that way. I prefer to pay attention to those levels, because if the market violates those levels, it tends to search for those previous and previous support and resistance fractal levels. At this point, I will pay attention to those levels, not a situation to short or to buy the market. I have no, we can try to identify based on this false breakout above the most recent price action. I can try to extend this previous, actually it's this low here, and I can try to search for a fib reversal extension that will put the price 132.30, so a few points below the golden fib, and that will print as a kind of let's call it a shark pattern in the middle of this process. So the 168 extension, this pattern can also extend to the 224 extension below. That being said, I will not be surprised to see that pressure around this level. And if that fails, I will see the price retesting these fractal supports. If you zoom out, we will see this eventual and for now virtual ascending trend line that maybe are not reinforced around this monthly fractal support level. Again, daily approaching the 200 moving average, entering oversold conditions, eventual cipher pattern, eventual shark pattern at 168 extension. Let's pay attention to those levels. There is no, let's say there is no situation, there is no motive at this point for me to get involved with this Canadian pair at this point. The motive was here, the motive was here, and the motive was here. So we had three different motives to engage the market against the most recent momentum. So some of you already know, trading harmonics, most of the times you are trading against the most recent trends. We try to identify those reversal behaviors. We never know what will happen next, but we know where to get involved. So at this point, I have no motive to get involved with dollar versus Canadian dollar. Dollar versus Canadian dollar, correct. Dollar versus CHF, published yesterday, I believe, or the beginning of this week, also threatening the daily fractal support at this point, below the weekly fractal support printed last March 20. So, and we are now approaching the completion point for a bullish cipher pattern at 78% retracement, 0.9828. This is the completion point, which will suggest a pullback around this level. Again, we never know if that will happen. We are entering oversold conditions, and we are trading below this major ascending structure trend line acting as support. It's now a resistance with also the 200 moving average as a pressure element there. Fractal resistance printed above on a 4-hour time frame chart. And we are threatening all those support levels. Obviously, monthly support, eventually it will be retested sooner or later. It doesn't invalidate the possibility to develop this cipher pattern from the 78% retracement, retested trend line, and then new lows. This is my vision for CHF. Dollar versus yen, also published before the completion point. This is kind of not a 4 hours time frame chart, it's a daily time frame chart. It's a critical level as published and very similar to other yen related pairs. So this is my first level of pressure. So this is a confluence, a cluster zone between extensions and major retracement levels, between the golden fib, extension, retracement, and alternate and internal extension levels. I need to spend a lot of time to explain that, but it's an extension from the first swing and the retracement extended below. So it's kind of a confluence or cluster box that I use to identify the potential pressure levels. So at this point, we have at that level, at that cluster zone, the market has decided to enter into a consolidation period and moving sideways right at the completion point of this for this shark pattern. So we have a false breakout above the previous highs. This was an high printed overbought left shoulder, the head, and the eventual right shoulder there, and the violation of that structure, suggesting more bearish momentum. So the 200% extension from this next zone, from this support level, which I use those blue lines there, 200% extension will put the price at 106. This is also the 224 extension and the completion point for another shark pattern. That one at 224 extension at confluence with the 78%.
So Andre, are you saying we could be bottoming in this zone, but if not?
Eventually we could, eventually we can see the price printing some bounce there, and we will see how the market behaves above if the market decides to retest this trend line, this previous structure trend line. If that happens, we will see some pressure there, and well, we need to wait. Eventually, new lows, searching for that 78% retracement.
So you would prefer to sell rallies here instead of
Eventually,
looking for
yes,
a,
yes.
no, you know, if we get a pop now, you'd sell a rally looking for your green line. What would convince you that the lows are in here? Say we went to 107.60, which it looks like you're 140, 140 level.
141. I will point to the 141 extension. This is an extension. Let me try to point this. This is an extension from this this first swing. So we are trading the 127 extension, the default Fibonacci extension we search for when the price starts to break structure, or to break it, in this case, to break the support. I will not be surprised to see a new low. We have bullish divergence between those lows, suggesting this is an ABC correction already finished, but to make that conclusion, we need to violate this structure, this bearish momentum.
Okay, back over 109-ish.
Back to the 38% retracement ultimately. So this is the target for this sharp pattern, or let's say the minimum.
Okay. Let's say we confirm and we go above that. What would be the harmonic pattern that would be in force for a bullish outcome if we took out 109.58?
For a bullish outcome, I need to wait for the market to develop, because I.
Okay. Lost you. You there, Andre?
Yes.
Oh, okay, I didn't hear you.
Your internet connection is unstable. I believe this is general. It's not usual for me. Are you there? Dale?
I'm here.
Okay.
I'm here. Yeah.
So I'm sorry about that. Not usual for me.
Relax.
What we have is a bearish scenario if that happens. So I will not be surprised to see the market develop into this smaller, lower degree bearish pattern above at 109, 88% retracement from this very last swing, from this daily fractal to the most recent one. So 88% retracement from this swing, it will print as a lower degree.
Okay. I could tell because I tried to talk you into the other way. You really feel that 106.37 is destiny. It's a magnet to you.
Eventually, yes. Eventually, yes.
All right. Well, thank you.
I'm still waiting for that to happen. We have an interview now, Dale. Yes.
Yeah.
Okay. Just finishing with that S&P, and with a very similar chart on Dow Jones. We don't cover Dow Jones for our subscribers, but very similar behavior, but cleaner picture. So this is one of the charts that I published for ForexAnalytix community. For our time frame chart, we are approaching the 200 moving average, and we are feeling that pressure at this point. And finishing with my expectations for a daily picture, let's say a daily picture on Dow Jones, 26.26 for Dow Jones, a bearish cipher pattern, 29.08 for S&P. Those are my expectations. S&P will print me a bearish cipher pattern. Pull back to the 78% retracement. That will suggest a minimum of 38% retracement. And Dow Jones, very similar, actually exactly the same price behavior. I expect the market to violate those fractals, those resistance levels, and to search for that previous structure support levels. Previous support, this is actually a double top. This is the next zone for that double top. Well, who knows what will happen until there. Have a nice weekend, everyone, and thank you very much, Dale. All yours.
You too, Andre. All right, Brian. I'm going to promote you. You're getting a promotion today. Stick around for Brian. I'll give you a hint. He doesn't use charts to make great market forecasts. Okay, Brian. I don't know if you're going to be showing a screen or what. If not, I could grab mine. I could also show your, are you there, buddy? Waiting for you, Brian. So you go up to the top. I'm going to grab the screen. There you go. I see your screen. I don't have to. So now we just need volume. Let's see if you're muted. I can unmute you. There you go, bro.
Can you hear me?
Got you, Brian.
Oh, man.
Oh, it is so great to talk to you. How many years has it been since we did it on FX Street, Brian?
You know something? I went back and looked the other day. The euro yen was at 144.
Wow.
And that's when I said to sell the 144. Look where it is today.
Amazing.
It's been almost 3 years.
You know, Brian, I've known you for a while. We're good friends. We, support each other.
Absolutely.
It's been such a long time, though, and it's something I normally open an interview with. I can't remember. Can you tell us a little bit about the beginning of your journey? I know you've been on this road for decades now, but how did it start for you, man? What was your first gig, and what were you doing before that, and who do you blame for getting you hooked on FX? Huh?
Okay. Good question. I'm glad you asked me that. I began around the 2003-2004 period. I've been a college teacher for the past 25 years, and I never got on staff. I was always an adjunct college teacher, but I survived for 25 years. I'm a political scientist. I'm supposed to be a political scientist. So I've been in the classroom for 25 years.
Nowadays, you have to be a political mad scientist.
Oh man, I'm telling you, things have changed, and I haven't done it now since Inside the Currency Market was published in 2011, and I really don't have any desire because it's different now. Students are different. They're lazy. There's 1 in 1,000 that are really into these topics.
Well,
anyway,
haven't you even noticed that, Brian?
Coach, sorry to interrupt,
Yeah.
but we can't see Brian's screen.
I see it.
You do?
blank over.
Brian told me on trading. I have it right here.
Okay. Can somebody?
Why don't you do this, Brian? Stop sharing and share again, because perhaps.
No, if it's only my issue, it's okay.
Maybe it's yours. How about the rest of the audience? Can everyone see Brian's screen?
I cannot see, says Umar. So it's not only me. No, Andres says no as well.
Oh. Yeah, okay, they can't see.
Yeah,
all right,
can.
Brian, why don't you
click share
stop
button.
Click share and then unclick share.
Yeah.
Click share and choose the screen you want to share. And if you're already sharing a screen, just
I don't have a screen to share.
Ah, okay. So,
oh, I see. Okay. All right.
Well, unless you see.
Okay. You know what? That's me. I'm going to share. I'm going to share. I'm going to show your website. Okay, buddy?
Okay.
Okay.
I'm going to grab it. Okay. So
Perfect.
I'm spaced today on a lot of things so far today.
Hey, did you hear Dr. John passed away overnight?
Dr. John and the Night Trippers?
Dr. John. I was in the right place in the wrong time.
Yeah, okay. That was it. Yeah.
Passed away overnight.
Wow. Did you hear that Carrot Top committed suicide?
No. Serious?
He threw himself into a juicer. Anyway, all right. So tell us about your first gig in the business, Brian. I'm showing your website here.
I was sitting one day between classes and I was watching CNBC. Now, I've been trading stocks for most of my life because my grandfather was a master stock trader for something like 55, 60 years of his life. He lived to be in his late 90s, and he was just a master. you know, and currencies I knew nothing about. So I just began investigating. It was 2003, and then one thing led to another, and then I began to download a demo. You know, I began to look up indicators. You know, I followed the path of everybody else, you know. But here's the thing. In the beginning of those indicator days, I was a loser, you know. I mean, just like everybody else that comes in, I was a loser. And I was tired of losing, and I told myself, I will not let this thing ever beat me. And I stayed at it. I stayed at it, constantly working, constantly researching. I mean, I'm entering my 16th year, to give you an idea of, you know, what staying at it really means. Well, I eventually developed a moving average system. It all based on statistics. Moving averages from 5 days to 253 days. Because
you never look at a chart.
No, there's no need. Ever since something in like 2010, that's when I gave up indicators and charts. I mean, well, you know, I look with, like the last guy I was just talking, I look with fascination when I see that. I like it, you know, but I would never use it because, man, there's a lot of becauses to this. The market price is wrong. There's so much wrong in a market price. And there's so much more to
Tell us just a few things that are wrong with market price.
The averages are off. A lot of your averages are off. A lot of your targets then become off.
Why are the averages off?
Because we're into the days of deep, deep compression of the averages. You have to look at a longer term view. More than 200.
Because ranges are compressed?
Yes, absolutely.
Okay.
They have been compressed.
Okay.
Anyway, let me go on another second, and let's go on. I got tons and tons of stuff prepared.
Go ahead.
Okay. So I developed a moving average system. 2011, from 2010 to 2011, I wrote this book, Inside the Currency Market.
Yeah, I'm showing it.
This book was, I mean, it was Wiley. You know, everybody that knows Wiley, ever wrote a book for Wiley, zero promotion. I don't know why they published these books. My feeling was they do it as lost leaders. So I signed into FX Street in early 2012 for the heck of it. I didn't know FX Street from a hole in the wall. So about 3 or 4 months into FX Street, I put on a trade show, the 2012 trades. And I was telling everyone I can hit perfect targets. Targets, what's targets? Nobody understood the word target in the currency price in 2012. So I just kept posting trades. I said, this currency price will go here. It went there. And this went on for, let's see, there were 25 trades, 36 no sleep days, and I hit something in the vicinity of 2,500 points in the 36 days. I was exhausted. I mean, I laid out on my bed for like a day, and I was gone. I was no sleep days. Anyway, that became kind of my claim to fame. Francesc at FX Street, he wrote up this nice, wonderful thing about me. And there were other people writing things. So, but I progressed from those days because our volatility, and let's not use the word the compression of the averages, they all died. Well, come 2014, 2015, the ECB adopted, they were embarking on this new interest rate study, a 2-year study. So that's—
Well, you mean laying the groundwork, preparing for negative interest rates?
And preparing for what we have today. All of this is derived from the central banks, and specifically the European central banks. What they did was this. Well, let me say this. My system today, my day trade system today, is all based on interest rates. I can use inside of my daily interest rate system is also a long-term system, as well as the weekly trades. Let me see, what does But now what I had to do was I had to figure this thing out to see what these guys were up to, you know. And this took nights upon nights upon nights to work out how does interest rates and currency prices work. This stuff is not published. It's just you have to fight on your own to figure it out. I did. It took me months upon months upon months. At one point, I thought I had it, and I kept running into brick walls. And somebody wrote something, and I think it was Mark Chandler. He wrote something. There was a one line in something that he wrote, and it triggered it. My mouth dropped. I went back and I began reworking the system, and now I got it. I mean, I have now a 3-year daily trading system based strictly on interest rates.
Okay.
What's
your business model, Brian? What do you look? What do you do? Do you is it a subscription service? Do you manage money? What's your goal, and how are you using the system?
Okay.
For yourself, for people, what's going on?
Mostly for myself. I take on those interested traders. You know, come correct, come sincere, and follow the script, and you'll be just fine. You know, I tell people, anybody that I don't know, I tell them, whatever you know, whatever you think you know about FX and trading, throw it out the door, and then enter, because things have changed. The way that the actual currency price works is there are so many nuances to this, Dale. I mean, it is astounding. I can sit here and talk for hours about it.
How about this then? We won't talk for hours. A lot of people are calling this action in the dollar pretty negative, and the euro looks to be breaking out of a pattern. What's your stuff saying about euro long term?
Okay, you want to go to the DXY first? How about that?
Sure, go ahead.
That's really interesting. You want to watch, here's your point to watch on the DXY, 94.72. That is the 5-year average. And obviously at 96, price is trading above. You're pretty much, and then you have support, deep supports, 95s and 96s almost all day long here. You're pretty much, your range pretty much for the DXY is the 95, 96 to 9. I'll give you the specifics here. 99.20, 99.26, 99.07, 98.90, 98.91, 98.12. If you can catch those levels for us and short there, you got a nice short on your hands. If this thing trades above by some luck, man, you got yourself anything above these prices. It's a free trade. They're free money, free trades.
Okay.
You dream
mean
about
above 90, above your highest resistance level is 99.20.
99.26, yes.
Okay.
Yes.
All right. That number rings a bell to me.
Here's your support. Your support's 95.72, 96.18, 96.00, isn't that weird? And 95.61.
Okay.
The targets are pretty much at a 96.
Do you have a bias? I mean, it's good to know those levels where you think we're going to support from here, or we're
a little lower. Yeah, a little lower. And I would look at that area right around that 96.18 or something above that. That would be your long point. As far as the averages and the long-term averages on DXY, there's really not a lot wrong with it. I don't see any major extreme moves up or down in any way. I just see more of the same moving forward. I see that I mean, if I have a bias, it's oversold.
Okay, let me ask you this. I had a guy on who said that the central banks are, he believes, as he looks at things moving towards parity, like, cable being wherever it is away and the euro being whatever it is away, that central bankers want to bring a lot of these things to parity before a currency reset. Do you think there's any currency reset in the future for the dollar? And it's rain. What's your take on, people talking about this? And
I watch, something, I watched that guy but I watched it by complete accident. I saw it. I had a few minutes in my hands. I clicked and I was amazed. I don't think that there is any such thing as all currencies moving to parity.
okay.
I think that's a fallacy. And I mean, respectful to him. He's got a good argument. I like him very much. He's got a good argument. But what do you have to think about? You have to think about what moves the currencies? The interest rates. Where are interest rates? Interest rates always trade below the currency.
Okay.
You need the currency. Central banks want their currency to move. They want to make it acceptable to buy it and sell it, to move it.
Okay.
Therefore,
So, I actually have you're talking about interest rates. I actually have, I don't know if you could see my screen, but
I can.
okay, I'm looking for some type of trough here in the 10 and 30 year. Here we are. Looks like yields are pressing new lows here. Yeah. Okay. So I'm looking for reasons to think that interest rates are troughing. Here's a 10-year, right?
Yeah.
Here's a 30, not even close to the low, which tells me that everyone who's worried about an inversion on the yield curve, it might be shocked because the 30-year structure is stronger, which says rates are going to go up faster on the long end than the short end because that's what the Fed controls. So if I'm right about yield rates beginning to bottom out here in the U.S. and that they could head up to where they were last year, which is all the way up here, how would you position yourself in the currency market?
I absolutely agree with that. 100%. 100%. Let me see.
I mean, is that going to be dollar bullish?
I would.
Or is it going to be bearish because it's going to be flight capital out of long-term paper, and we're going to have to pay people more for the promise that we're going to pay them back in 30 years?
Where I'm looking at on a long term, I'm looking at the euro long term. There's a 1.1650 target. The
165 target?
Yeah, 1.1650, right in that vicinity.
Oh, 116 and a half.
Yeah, let's see.
Okay. That would be up here. That would complete the wedge objective.
I'm looking at
So that's going to happen. So that's going to surprise people. If the forecast is correct and yields start rising here in the U.S., most people would say that's dollar bullish. But you're saying that the euro could see 116, 117.
Yes.
Easily. Okay, I agree with you just based upon my technical work. I wasn't sure, if the interest rate differential, maybe that means what Draghi said about not doing anything with rates yesterday is real. And as our yields begin to turn up again, perhaps even the bund might get back to 0%. Who knows?
Yeah. I would look at interest rate to interest rate between these two nations. People look at yields to yields. I don't. You know why I don't like that? Because it's the positioning between the United States and Europe. We're complete opposites. The United States interest rates are always priced and trade below, and they price yields. So that means interest rates first, yields above. In Europe, it's reversed. It's interest rates above, yields below. So okay. I mean, you're doing a crisscross on. You're missing a lot in that crisscross.
Mm-hmm.
So,
okay.
You wanna? How about Fed funds?
Go ahead.
This is really interesting. I ran this data for 27 years, 27 monthly averages.
You're not on camera. You could be, and you could be showing this, but we'll do that next time.
Oh, really? Oh, wow. All right. Oh,
I know you like to use a whiteboard. So
yeah.
there is a web. We'll do it next time because we can't see what you're talking about.
Oh,
unless you had a webcam, unless you used your webcam. You want to turn it on? Go ahead.
How do you do it?
A drop-down menu. It'll say start video.
Yeah, do that.
No, you do it.
Oh, I do it.
Yeah.
Drop-down menu.
So up on top where you have the volume.
Stupid. Up on top, volume.
Well, I'll show you for next time. All right, go ahead with Fed funds.
I'd love to show things. I've got so much to show.
Yeah.
That's so different and so interesting and accurate at the same time. Okay, Fed funds. Okay, I ran these averages from 1 year monthly average out to 27 years. And ask yourself now, now when I say I ran the averages, you have to look at not 2.50, the headline. That's not the indicator. The indicator is the effective Fed funds rate, which is the tradable, that's the daily tradable rate. You have to count, if the headline is 2.50, you have to count 12.5 points below that, below 2.50, and that will give you the effective rate. That effective rate has been trading right around 2.38 since the last raise, and that's where I took my data from 2.38, and I entered data from 2.38. Right now, the Fed funds trades between the, how about this? Is this sick? Between the 1 year and the 24-year monthly average from 2.13 to 2.47. That's a lot of light years in between.
Yeah, well, we haven't seen these rates since the Civil War.
Yeah, practically.
And we're almost in another one.
Right,
So,
right.
All right, buddy. So, what's the best way for people to get in touch with you? And we'll do this again down the road with a webcam. Huh?
I didn't mean to blow all my times like that. Okay, btoomey.com or inside the currency market.
Go ahead, wrap it up with your most important advice to people looking to speculate in the market.
If Fed funds, if they cut interest rates, one and done. I don't see it going two. I don't see it going anymore. Simply because one Fed cut would put the effective rate at 2.26. Two cuts would, and then that would give it a range between 2.19 and 2.33. That is not terrible. If they cut twice, that means you're going to trade the effective funds rate below 2.19. That's, you know, I don't think you want to do that. You're into a different territory when it comes to these.
Would you say crisis level if they have to go more than once, if there's a financial crisis happening?
Yeah, leave the powder open for, for action in case it needs to be taken.
You mean like S&P 2200 instead of here at new highs? Save your ammo for when you need it?
Exactly. I mean, if anything, one and done. I don't see why they should go to. In terms of the effective rates, I don't see it. I don't see. Why would you want to do it? Why would you? And
you mentioned to me on Twitter, you're pretty optimistic about the future of the economy. I think you said something.
I am. GDP.
Like GDP you were talking about.
Yeah, I ran that data too. GDP is at 3.1 and 3.2. It trades. I designed 10-year averages for GDP on a 10-year basis. You get the data from the New Zealand Central Bank for anybody interested. This is real GDP, not nominal. 3.1 last reported. It's off the charts. It's not even. It's above the 10-year average. I see the economy at the 2.0s, as many have forecasted, 2.0s, 2.5, 2.3 all day. I mean, all day. I don't see any problem with these averages. They're in good shape. I see GDP in good shape. Trump was talking about 4.0 and Kudlow as well. They were talking about 4.0, 5.0. They were not kidding about this, okay? 4.05, 4.07 happens to be the major top right now in terms of all of these averages. I I don't see that hitting just yet, but I do see, if Trump can keep it alive, there's no missiles fired, then, and there's no radical changes in the economy, I don't see why we can't continue higher, over time. But, obviously, if you have a fast move higher, that's not going to be good. You need a slow and steady rise above.
Okay, no warning signs for the U.S. economy. Brian Twomey, sanguine about it, optimistic about it. You can follow Brian on Twitter at author Brian Twomey. What's your website address here, Brian? You want to give it to the crowd?
InsideTheCurrencyMarket.com or btoomey.com. Either one works.
Okay, and pick up this classic from Wiley, Brian Twomey, and consider that there are many ways to skin a cat, and I guarantee you that many people in here have not talked to many that do not use technical analysis and still can trade FX. So
thank you, Brother Dale. Thank you, everybody, for listening. Thank you.
All right. Have a great weekend. May pips rain down on you, my trading.
Thank you, my brother. Stay healthy. Stay good.
Okay. Adios, everyone. Have a great weekend. Remember, don't just count your pips, count your blessings. And I'm going to see everyone later on. So let's see how I end the meeting here. Adios, everyone. Have a great weekend.